Do you want to learn trading and start earning within a month? If given a choice, even I would say yes. But believe me, there is no magic formula. There are no shortcuts that would give you consistent returns all the time. Trading is a skill, and skills are built over time. To become a successful trader, you need to do only one thing, that's practice. You need to do same set of actions again and again and again for a longer period of time to become successful. If you want to know what you have to do, how you should do, and how long you should do it, then stay with me. Let's get started with the disclaimer. So, the views expressed in the video are only for informational and educational purposes and do not constitute to be of any investment, legal, or taxation advice. They are not indicative of the future market trends, nor is to predict the same. Republishing any part of this video will be at your own risk, and we at Market Secrets will not be liable for the consequence of any such action. Bear with me, this is going to be a long video because I want to talk about a lot of things. So, first thing is journey of new traders. If you are a new trader, first thing you would have done is read some book or go through Zerodha Varsity or any other open platforms that is available, and you will read through that content and you will start trading immediately. So most of the new traders, they will directly start doing intraday trades by taking some leverage. And what happens? Obviously, they fail and they lose money. So they will doubt whether their learning is right or wrong. So they will go through all those phases, and finally they will end up in some Telegram channels or in money control by following some specific persons. So they will start taking up future and option calls from the people they never knew. They won't even know their names. Well, of course, this includes me as well. So they'll start taking future and option calls without even understanding what futures and options is. Just by going through a book about futures and options doesn't mean you understand futures and options completely. No, you're wrong. If you really want to understand futures and options, open a dummy simulator account in any tools that is available in the market and put some capital and trade on that using only futures and options for a month, and make sure that you are able to retain the initial capital that you have invested. If you are able to do that, then you are good to go with futures and options. If not, you are not qualified to trade in futures and options, especially options, because options is a dangerous animal. Before you know it, it would have wiped out your account completely. Most of you think that options calls are less risky, but I would say it in the reverse. Options are the highest risky calls in the market. In case of money, it would look like 1,000 rupees or 2,000 rupees, but at the end of the day, it would have eaten your account completely without even giving you any idea of what is happening. That is the danger of options. So the next thing new traders would do is joining some paid calls or paid trainings. So you would have been following some analysts for a couple of months, and you'd have decided to join their paid calls and trainings. And once you joined, the only thing that you will notice is the calls are good, the training is good, but still I am not able to make any money out of it. Well, that is meant to happen. Do you want to know why? Keep watching. So, if you have lost in paid calls, free calls, and your own calls, then you would be in a fear of failure. You would have heard terms like stop loss is more important than a target, or risk reward ratio in any trade is most important. So you would have heard all those terms already. So whenever you take up any trade, you'll always be in fear of losing. And what happens? That fear makes sure you will lose. You will lose that particular trade that you have taken after a long time. And that would make you to miss some good trades as well. If you really want to earn money from markets, first thing is you should not fear about the market. You should not think like big players are watching me. I am cursed and they are manipulating the market. That's all nonsense. You have to drop that fear to be successful. So let's see how to do that. This is the topic for today. Learn or earn within a month. So I know a lot of you are very eager to learn. A lot of you even messaged me like, what is a formula? Where should I start? And I already learned these things and whether it can be useful. So these are the basic technique that is being followed nowadays, like Fibonacci numbers, Gauss numbers, natural squares. So that is being followed by a lot of analysts nowadays. So the second set of people, they trade on price action. They talk about trend lines, demand zones, supply zones, all those stuffs. And third set of people, they trade on chart patterns like pole and flag, head and shoulders, cup and handle. So there is another set of traders who is doing all those stuffs. And the fourth set of players, they go for data reading. They talk about OA analysis, stick data analysis, all the stuffs. And there's another group of traders who are very well advanced and they do this market profile strategy because you need a lot of software to do that. And what a new trader what he do is like he'll analyze all these things. He won't just stick to one. He would have attended some price action training and then he'll start researching about Fibonacci numbers. So that is what happens. Don't try to learn everything. Don't try to replicate anybody. That is the secret of success. You have to, do it on your own. Don't try to replicate anyone. You will never be able to do it. You have to find your own way, and I will help you to do that. So the point here is like, you may be very much interested. You may want to give everything that you have got for the next 1 month or 2 months to learn and master trading. But believe me, it is not going to work. You cannot learn and earn within a month. It is going to take more time. Understand that. Believe that. Absorb that. And once you're done with that, once you know the time it is going to take, then nobody can stop you. Nobody. But you have to absorb the reality. It is going to take some practice, lot of practice. I know I'm repeating myself, but bear with me. It is really important. So, the next important item, our mindset. Market, believe me, it is not an ATM. You can't, just come in and take the money that you want and you can just go. Because everybody who is trading in the market is doing it for money. and no one is going to give it for free, like give you something back for free. So everyone is trying to snatch someone else's money. That is what is going on in the market. It is not an ATM. So don't come with a mindset that I'm going to start trading from today and I'm going to start earning from today. You don't act that way. And a lot of people claims that they'll be able to generate 50% returns or 100% returns possible every month. So it's like double your money, or 50% of your entire capital you can you'll be able to take it as a profit. Believe me, it won't work. 10% of capital, I would say, is a proper nominal return, because um, when you take our own channel, I gave a call on Nifty 1100C. So the target, the entry was at around 15 and the target was around 100. And when it hit the target, a lot of people even messaged me like, it was a wonderful call, it was a great call, something like that. It's like 6 times of your money, like it even went beyond 150, I believe. So it is more than 10 times your money. So a lot of people messaged me about that particular call. That is where the problem begins. You cannot replicate the same thing again. Just because I got it once, it doesn't mean I will get it again. I'm not saying I won't be able to do it again. You can very well do it again, but you cannot do it on daily basis. You cannot do it on weekly basis. You cannot do it on monthly basis. So that is what you have to understand to be successful. Don't expect that kind of returns every day or every month. Be reasonable. In any business, the growth in 2 digits is considered to be really great, even for an year. And if you're going to get 10% returns every month, then that is a great job. Don't go for 50%. Don't go for 100%. Don't go for 500%, because you'll end up losing money, and that is what is happening. So we already talked about paid calls, so I'm going to skip this as well, paid calls and paid trainings. So one other thing that I want to talk about is indicators and scanners. I know there are a lot of scanning tools available, and there are n number of indicators, and you have tried all the indicators as well, like moving average, Bollinger Bands, or MACD, super trend, parabolic star, everything. You have tried all the indicators that is available in the world, but you are never able to make any money out of it, right? Why? Well, we can talk about it in the later part of our video. Let's move on to the next slide. So next comes a very important part: how to trade my BTST calls every day. First question is, what is your capital? If your capital is below 3 lakhs, don't ever think about futures or options. Trade only in equities. So the second question here is like, how many shares I should trade? So in futures, if you're going to trade it in futures, don't go over 1 lakh. You should always stick to 1 lakh. When it comes to equities, you should go for proper positional sizing. I hope you know the term positional sizing. So in general, I will be providing 1 or 2 BTST calls. But going forward, for the equity traders, based on equity traders' request, I'll be providing even 4 to 5 BTST calls in equities. So if you want to take any trades, you'll have to follow proper positional sizing. And I will provide you a calculator, like an Excel sheet, that would give you number of shares that you have to take based on your own capital. So I'll leave the link below in the description section. You can go ahead and download that particular calculator, and you can use it whenever you want to trade my calls in equities. Next comes the most important part: Trade entry. Make sure you enter within 2 to 3 ticks from the entry price that I have posted, because most of the time, most of us, we trade for small profits. So I always suggest to book profits, next in the next 2 rupees or even 3 rupees. So if you're going to enter in a trade which has already moved up, then you are risking more money in your stop loss. I mean, if if that particular trade is going to hit the stop loss, then if you are entered, very higher from my entry price, your stop loss is going to be more. That is the ultimate reason I say don't enter any trades that had already moved. Also, ensure that whenever your trade is in profit, you're trailing your stop loss. Or if you're trading in equities, you'll have to make sure you're taking partial profits to make it risk free. For example, if you're trading 5,000 shares, you'll have to close 3,000 shares at your first target, and you just have to hold to the remaining 2,000 shares, because even if it falls, it is going to be risk free, and you can even get out with minor profits or cost to cost. So trailing stop loss and taking partials is more important whenever you take up my BTST calls. And the last thing, exit losers early. Don't wait with just hope, believing that the script will move up again. So if your stop loss is going to be 2,000 rupees, make sure you get out of the trade when your MTM is showing as 2,000 rupees loss. Because exiting the losers early and riding, the winners is the right way to trade. So I'm going to repeat a few important points. So if your capital is less than 3 lakhs, don't trade in futures. Trade in equities by following the positional sizing. Don't enter far away from my entry price that I have suggested. Ensure you book trial your stop loss or book a partial quantity whenever the trade moves in your favor, and make sure you exit the losers early. So next comes the positional calls. So as you already know, I do provide few positional calls. So the condition is still going to be the same. One day difference is like, if you don't have a capital of 5 lakhs, don't trade in my positional calls. Go with equities and follow the positional sizing calculator that I have provided. So you'll basically you'll have to divide your capital, and you have to put it in multiple scripts, even in case of trading, to ensure that your capital is not locked in any specific scripts. So if there is going to be another opportunity that is coming in while this trade is still going on, you'll be able to take it up. So that is the beauty of the positional sizing. And when it comes to positional calls, the stop loss is going to be a bit deep, and you'll have to hold the trade without fear, both in profits and loss. Because the basic mindset of any trader is, if you have taken up any trade and if the price have moved down, and if it is going to come up, most of us, what we'll do is like we exit that particular trade cost to cost. That is the biggest mistake that we are doing, because most of the time we'd have seen that particular script hitting new highs, and you would regret getting out of the trade cost to cost. That happens because of fear. So I already told you, lose your fear and hold the trade until the stop loss or target hits, because it is a positional trade. So it may take even 2 more days, but it will still go for the target. So don't book cost to cost or at minor profits. Hold that particular trade for the target. So when it comes to our Reliance trade that we are holding, so Don't square off it cost to cost. It will hit 1000. Drop your fear. Alright, so let's move on to the next slide and back to our topic. So next topic is on trade management. So trade size. So we already talked about it. So you'll have to use the proper positional sizing calculator. So that is most important when it comes to trade management. Second is money management. Expect only reasonable returns like 10% a month or even 15% a month. Don't go beyond it. We already talked about this as well. Third one, loss management. So if you're going to have some 2 or 3 consecutive losses in a day, you should stop trading. If you're going to have 3 consecutive days of loss, you should stop trading for that particular week. Remember, stop trading doesn't mean you should stay out of the market. You should still come back in, and then you just have to watch how your scripts are performing for the rest of the week or rest of the day. That is more important. That will give you a lot of insights on what went wrong and what could be done better. So that is the loss management part. And there comes the most important thing. Never break the rules. Today you would have decided, after watching this video, you would have decided that you're not going to trade in futures and options. You're just going to stick only to equities and you're going to learn and trade. But tomorrow, someone in some channel or some of your friends will say they have earned, two-fold returns or three-fold returns in Bank Nifty call. And what you will do is like you will just go ahead and start trading options all over again, and this cycle continues. So that is what happens when you break the rules. So when you decide on your rules, your trading setup, write it down somewhere. Whenever you feel like breaking a rule, read it all over again. Make sure you have written the benefits of following that rules as well, so that you will never break those rules ever again. Because this is not a simple thing. Because if you are going to break the rule of not trading futures and options without knowing it completely, then it denotes you're greedy, and greed, it will obviously will push you to lose more. Please understand that. Never break rules. Never be greedy. Never take any trade because someone had took up some trade. Just because they gave some multiple returns once, it doesn't mean it is going to happen again. So don't break your rules for someone else. That is very, very important. So now comes the assignment part. So this is the assignment for today. So what I want you to do is like, first decide whether you are going to trade in futures or equities in my call. And you can download the positional sizing calculator, which will assist you whenever you take up any trades. So that's the first assignment. Next, you have to select a stock. Okay, we'll talk about the reasons later. So from the list of stocks that is available in futures and options, that is the 212 stocks, you'll have to select one stock. The preferred range of that particular stock should be from 100 to 1000. So that is the second job. So you can take any script that is trading from 100 to 1000. And third, do your analysis on that stock alone every day of this particular week. So do that analysis every day for the next 5 days, and Before the market opens, you should have predicted the direction and the range for the day. For example, if it is now trading at 500, you should have decided where it should move from this particular point, whether it will move to 500 to 510 or 490. So in which direction it will go and how many points it will go. So you'll have to predict the direction and the range for that stock for the next 5 days. So that is the analysis that you have to do. So that's your third assignment. And fourth assignment you'll have to do is you have to write it down. So whatever analysis that you have done, you should write it down. And you can even post it as a comment under this particular video. And you have to compare what happened in the actual market hours for that particular script. For example, your prediction is like from 500 it will move to 510. But in the live market, what had happened is like it went up at 500 and it went down to 490. So if that had happened, you should have that comparison written down somewhere. Okay, so you can post your comments or your observations every day as comment in that video, or you can write it out and keep it to yourself, and you can at the end of the week you can share that particular sheet as a comment as well. So you can do either of those things, but I will be waiting for it. So that's the assignment for you guys this week. Well, now all of you have a question. You will have a question. Why I should do it? So here is the reason. So I had a chance to interact with a lot of traders. So lot of successful traders. So what I have observed from all of them is there is no single way. I mean, there's not just one fixed way to earn money from market. I have seen people who traded in same script for the last 10 years and earn tons of money every day. Second thing is, I know people who trades in all the scripts that is available in the market, including the penny scripts, and who makes tons of money. I know people who trade just for 20 paisa for each trade and still makes a lot of money. So I know people who follows all the indicators that is available in the market, like they use some 10 indicators. I know people who won't use any indicators at all. So they're all successful. So what it implies is there's no fixed way to success. You have n number of ways. So with that being said, I know a lot of you would have already attended trainings. Maybe some of you haven't. That doesn't matter anymore. So only thing I want you guys to do is like, based on all the trainings that you have attended, based on all the understanding that you have at this point, analyze this particular stock. Analyze just this one stock for 1 week. Do it all you got and predict the direction of the range and give me the result. From there, we can take it forward. Believe me, this is going to work. And believe me, you won't need me there. You will be able to do it yourself. Do you really want to know how? Well, you'll get to know very soon. Stay tuned for the next video. So go ahead and start with your assignments. Good luck. Thank you all. And remember, you are awesome. You can do it.